gold prices have gone 15% per annum for the past 10 years.
Yeah, so what are the risks?
Enter into a future contract. There are different ways of investing in commodities. If you want to invest in gold, your stockbroker cannot invest in something else for you. If you know what you're doing, you're going to, cash out.
Hello everyone, welcome back to Investment Talk with Chuka. Today we'll be discussing commodities. Commodities. What is commodity? Growing up, I used to hear some of my uncles and big cousins talk about commodity. I keep wondering, what is commodity? And then by the time I found out what commodity is, I felt a bit ashamed because this is something I see every day. So today we'll be discussing commodities because commodity is one of the most lucrative investments anyone can get into if you get it right and if you're well informed. So I thought it wise to bring commodity into the topic so that we can discuss it, also help you make informed decisions. Without wasting much of your time, I'm going to bring in FAHAD once again. FAHAD, ALIU.
Thank you very much.
Yeah, welcome back again.
Thank you
the last time we spoke about mutual fund, right? We talked about type of mutual fund and all that, and I thought that it would be nice to follow up with commodities because it's also within that investment corridors. I could say they are cousins, sort of mutual funds and commodities. So what is commodity? I want you to just, as always, break it bit by bit to our audience and our viewers. What is commodity?
Thank you very much, Chuka, for having me here once again. To answer that question, I'll break it into two parts, right? Okay. Commodities generally means goods.
Absolutely.
Commodities are goods. Now, what does investing in commodities mean? Investing in commodities means investing in goods, right? Or natural resources that are used to produce goods, right? And these commodities are mostly traded on the CME, Chicago Mercantile Exchange, or the Intercontinental Exchange, ICE. So that's all commodities is about.
Yeah, what about
investing
in
goods? No, you don't have any commodities.
So there's no. So if I want to invest in commodities as a Nigerian, right here in Nigeria,
yes.
How do I go about it?
All you have to do is contact your stockbroker, right? And they are going to help you invest in whichever commodity that you wish to, invest in. So select the commodity you want to invest in. Like we always say, you do your analysis, right? And afterwards, you can, contact a stockbroker who will go ahead to help you place your order.
Which means, it's still the same way of contacting the brokers.
Yes. So if you want to invest in all financial instruments, it is advisable that you have a financial advisor, right? And you have a stockbroker who is going to help you to, achieve these goals. You understand? So for commodities investment, for mutual funds investment, for stock investment, you need a broker who will help you broker that deal, right? Face the exchange directly.
So what are the type of commodities one can invest in?
There are different types of commodities. We have the energy commodity, just like the oil, right? We have the metal commodities such as gold, silver, and so on. We also have livestock commodities. Yes, people trade cattle, right? We have agricultural commodities. We have the coffee. The coffee market is one of the biggest markets, right, in the world. We have the wheat market, one of the biggest markets in the world as well. Remember during the Russia-Ukraine war that happened then, Ukraine being one of the biggest contributors of wheat in the world, one of the world biggest contributors of wheat, right? Due to the Russian-Ukraine war, we saw an increase in the prices of of wheat, and the market really suffered a little. So those are the types of
so basically commodity is about you trading different products.
Yes.
It's just like you're in the Nigerian stock exchange, you're trading stock. So basically, as an investor, right, you have your stockbroker trade in all form of commodities. But let me put it this way: when I get a stockbroker, do I tell a stockbroker a particular product to invest in, or you can just use his discretion?
No, you have to choose the commodity that you want to invest in.
Okay.
Right? So that now boils down to your financial advisor or you yourself. After your analysis, you look at, okay, for example, gold prices have gone 15% per annum for the past 10 years. Over the years, we've seen 15% increase in gold every, an average of 15% increase. So if you want to invest in gold, your stockbroker cannot invest in something else for you. So you have to say, okay, I want to buy some gold. You understand? Then you're going to go ahead to invest in that gold, and over the years, whatever it is you want to do with it, you can either sell when you make your money, or you can hold it for as long as possible, as long as you want to hold it, right? You can also invest in oil. Right, you can buy oil. Oil prices are predicted to grow by 1 point. Yes, crude. Yes. Brent and WTI.
Yeah.
Right. So oil prices are expected to grow by 1.4% per annum from 2022 to 2027.
Okay.
Right. So that's also a very good avenue for investment. Copper is also expected to increase by 1.1% annually. Right, from 2022 also to 2027. So we are seeing this growth. We are seeing this return. So we just have to not let that market suffer. The market is not as liquid yet compared to the stock market, the fixed income market, and all of that. But there are opportunities in that market, and for people that have been exploring the opportunities, they get their returns as it should be.
Yeah. So what are the risks?
One of the risks involved is market prices, market movements.
Yeah.
Right. You can see movements in prices, very volatile. News impact is very high. Right, on prices. Today, Saudi Aramco can make an announcement and oil prices will tank. You understand? Tomorrow it might be Trump and oil prices will go up. Look at the example of wheat that I mentioned during the Russian-Ukraine war in 2020, when it started, in 2020. So and so on and so forth like that. You understand? So market prices is one. Then also sometimes some of these stocks are not liquid, right? So as a result of this illiquidity, we see that investors, lose out, right? When they need to exit the market. You understand? They are unable to exit. They are looking for a buyer. They can't get a buyer. We also have the counterparty risk also involved, such that the counterparty that you're trading with, the person you want to buy, can default. And you won't be able to get your products, your goods, your commodities that you invested in. You may not be able to get them. Also, there are different ways of investing in commodities. Right? I need to add that to it. When you invest in commodities, you can either buy it directly, or you can enter into a future contract, whereby you see, okay, in the next months or in the coming months, I expect prices of, let's say, gold, for example, to increase by so amounts. So if you want to, you can enter into a future contract now that on so date, I want to buy this gold at so amount, right? And the contract will be executed now. So when the time comes, right, there will just be an exchange. You've already locked the price in. You can also enter into options contracts, where you have an obligation to buy a certain commodity, right, at a certain agreed dates. You understand? It gives room for hedging. It gives room for derivatives, to thrive.
Taking positions.
Yes.
So basically, it still boils down to the fact that as an investor, you have to do your homework.
Yes, definitely.
Right? So it's just like fixed income market, for example. You need to be able to focus. You need to do your analysis. From what you've said, if the price of rice, for example, is going to go up maybe sometime in November, December, you can actually take a position now. You can do a forward.
You can enter into a forward
contract. Forward contract means that, look, you know what, I am locking in the price now for future delivery. Because I just need to break it down, so that our viewers will also understand, because we're beginning to use the technical terms, and the only sense of this is for people to understand it bit by bit, so that it makes more sense to them. Commodities is not really a popular form of investment in this part of the world. But it's a very lucrative investment. Very, very, very.
If you know what you're doing, you're going to, cash out a lot.
In as much as it's not popular, but people are making a kill from it. Especially volatility, because trading and market analysis also has to do with volatility. So the only danger there, or one of the risks, is the fact that it's not so liquid. But at the same time, it doesn't mean that it's not advisable to invest in it. So as a potential investor, right, in commodity. I come to you and I say, look, FAHAD, I want to invest in commodity. What layman advice will you give to me?
Do your due diligence. That's the most important advice that you would ever give someone who is looking to invest, right? Do your analysis, like we always say, right, on this show. Analysis. Do your analysis. Be sure of what you're putting your money into, and also be informed. Information is key. Once you have those put in place already, you're on your way to the sky. Once you've done your analysis, then you can proceed to make your investments. So you have to be sure of what you're buying and why you're buying it, and you have to be informed. You know, someone cannot invest in the gold market when you don't have an idea about what gold is. You can't invest in the coffee market or the cocoa market when you don't have an idea of what goes on in that market. You know, you don't even know what the coffee products are used for. You don't you just have to be informed. You just have to do your research, do your homework before you can now put your money into it.
And I should also add that investing in commodities does not necessarily mean that you have to have these products. No. So you're basically speculating.
Yes,
right?
yes.
You're buying and selling virtual products.
Yes, okay.
For the sake of our audience, so now I've done my research, and I think that based on the last 5 years, the price of gold has been going up by maybe like 15% now, in this case now. And I said, okay, look, I want to invest in gold. How do I go about it? I'm asking this because I know, because it's not a popular market, a lot of people don't know who to meet if you want to invest. So what you're saying is, I can call a stockbroker in Nigeria, my stockbroker in Nigeria, and say, look, I want to invest in gold. In commodity market.
Yes.
And this is the particular
commodity that I want to invest in. Yes.
And then they tell you the amount.
Correct.
Is there any fixed amount, or is there any limit, or
no? The price varies based on market movement, right? So as the market moves, the price varies, right? And you as the investor, once you place your bid to your stockbroker that, okay, buy my commodity, right? There are different ways of placing bid. You can do a good for the day bid, right? You can do a closing bid. When the market closes, this is the bid that I want you to bid at. It's at market closing that I want you to buy this thing for me. It's at the beginning of market that I want you to buy for me. It's at so price that I want you to buy for me. Do you understand? If you want, probably you're monitoring the market, right? And you say, okay, once this price gets to once it gets to so price, buy for me, or once it gets to so price, sell. You understand? So it all boils down to your broker. So your broker will look out for what you want for you, and they'll go ahead to proceed.
Okay, so like in fixed income market, for example, treasury bills, for example, I know as little as 10,000 you can invest in treasury bills. Right? So is there a fixed amount
for minimum
amount you can invest in?
No, there is no minimum amount, but minimum amount varies from each stockbrokers, right? Some stockbrokers, they do penny, right? They give you the small here and there, but some will say the minimum you can do is so amount. You understand? Some would say 5,000, some would say 10,000. Some can say the minimum they can do is 100,000. It all boils down to the stockbroker that that you are using. Okay, so one more thing I also need to add to that, right, is an advantage that commodities investing gives is edge over inflation.
Okay.
Right. So when you invest in commodities, right, as the prices of those commodities increase, right, it increases over inflation, because inflation is the movement in price of goods and services, right? So if you have these goods with you already, you understand, you bought it. So when inflation comes, it won't eat into your money, so you already have the goods, and by the time you are selling, you are making more money. Do you understand, from it? So it edges in investors over inflation. It's a very, very good form of inflation edge.
Well, in fact, it's as if you just took the word out of my, because I mean, my next video, I'm going to talk about inflation.
Okay.
Because again, inflation is one of the major, if not the major, determining factor in investing in any product. You just took it out of my mouth. I want to thank you, FAHAD. Thank you for coming in once again. Yes, you've heard it. Commodity is not really a popular market, but it's a very lucrative market if you play your card well. So till we meet again next time, this is Chuka Nwachukwu, your investment advisor. Bye bye for now.